Hello and welcome to Better at Business. I'm Angeline Latin, known as Mrs. Latin to my students. And if you're in grade 8 doing EMS for the first time, you have come to the right place. I'm going to be posting weekly content with regards to the syllabus that you need to cover. And what you need to make sure of is that you've got the basics right. Once you've got the basics in, once you understand that EMS is a different language and where everything fits in, this will be the building block for grade 9, grade 10, 11, and 12. So I look forward to seeing you every week. Wish you all the best. Welcome back, grade 8s. We are going to be unpacking the accounting equation. It's extremely important for you to understand what the story is all about, because this is going to be leading into cash payments journal, cash receipts journal, and then understanding how to do the general ledger. If you understand the basics, I promise you it is so easy to get it done into those journals and ledger. Right. So we've looked at assets, we've looked at liabilities, and we've looked at owner's equity. Remember, income and expenses affect owner's equity. So we've gone through the entire list, but let's just go through a little bit here. Owner's equity. That is capital, the money you're putting into the business. It is profit. It also is about capital, which is money you're putting into the business. Drawings, when you are shopping for personal use and you're taking money out of the business. Drawings is part of owner's equity. Income is part of owner's equity, and expenses. So, capital increases owner's equity. Profit increases owner's equity. Drawings decreases owner's equity. Income, money coming in, increases, and expenses, all the things that you're paying every month, decreases. You need to know this formulation. So it's assets is equal to owner's equity plus liabilities. We're now going to look at what are the effects that transactions have on a business. What does that fancy word transactions mean? Exactly. It is you buying something or you are paying for something. That is a transaction. You're buying and your transaction is you receive something, or you are paying for receiving money and you are giving something. So investing money, capital, is a transaction. Withdrawing for personal use is a transaction. It's called drawings. When you buy assets, you are making a transaction. When you are paying expenses, when you are receiving income, these are all transactions. And transactions, as you know, must be recorded. This is a reminder. I have gone over this with you in the previous episodes. You must know this. You must know what an asset is, you must know what a liability is, and you must know what forms part of owner's equity. Very important. If you know this, you need to stick this up in your room somewhere, because if you know this, everything else is going to be so easy. Remember, we call these accounts. We open up accounts because transactions are being made every day in a business. Whether you are buying something or whether you are paying something, that is a transaction. Okay. Assets. Remember, vehicles, land and buildings, bank, cash float, petty cash, debtors, equipment. Assets, when we receive money, assets are increased. When money is paid out, asset is decreased. Let me explain that. Remember, bank is your asset. So when you receive money from rent income, what happens to your bank? Your bank account is increased. The money is more. When you are paying out of your bank account, what happens to your bank? It is decreased because you are paying out of the bank. So, bank, when you receive money, is always plus. When you are purchasing or buying, it is always minus. It's always decreasing out of your bank account. Owner's equity. What is owner's equity? It's what you own. Capital, drawings, income, and expenses are all part of owner's equity. Income and expenses affect owner's equity. Capital and income increases owner's equity. Drawings and expenses decreases owner's equity. Liabilities is a little bit different. So liabilities is what you owe. So it's loans or a creditor. Now, when you are buying on credits, you are increasing what you owe. So when more money is borrowed, you are increasing your liabilities. What does liabilities mean? What you owe. When you pay your debt, you are decreasing liabilities because there is less debt, less money that you owe, and that is a good thing when you are paying off your liabilities. When you have to work out what affects transactions, you must know that there are always two accounts affected. Grade 8s, always, 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 bank is affected. It is either affected positively or negatively. So it's either a plus or a minus, positive or decline. Let me give you an example. You are buying equipment for your business. You are going to open up your tuck shop. You're buying a slushy machine. Okay. So what are the two accounts? Because now it's accounting, you got to get the lingo. What are the two accounts affected? I told you always bank. So bank and equipment. Those are the two accounts that are affected. Always two things. You're going to circle two accounts, two things, but it's always bank. Your bank is either increasing or decreasing. You need to read everything when you receive this in an exam. It's going to give you a little bit of a story. It's going to tell you a courtier has a hairdresser. So in your mind already, you can start thinking, what does a hairdresser classify as equipment? What would hairdressers see? What do they do? It's a service. Remember, it's a story, and you've got to formulate that picture and that story in your mind. It's important to read so carefully. So let's go into the first one. This is the transaction. This company bought equipment per EFT for 30,000 Rand. What are the two accounts that are affected? Remember, I told you, always, always bank. When you see the word buy or bought, you know it's coming out of your bank account. The second account is equipment. And what is equipment? It is an asset. So we've now identified and circled those two. You've now identified the two accounts that are going to be affected. So what is bank? Bank is an asset. When you buy something, it is taking money out of your bank account. So it is decreasing your bank balance because you're buying, you're minusing. So it's a minus. It is decreasing bank. Equipment is an asset. Did you gain more equipment? Yes, you did. So your assets in your equipment account will be plus because you've now got new equipment. You've got a new asset into your business. You receive 50,000 Rand from owner as capital. Okay, so you being the owner, receive 50,000 Rand from yourself as capital. What are the two accounts affected? Remember, always, always bank. Always. But now what do you see there? It says receive. So is money going into your bank? Yes, it is. So receive, great. I know that's bank. Capital, what account is that? That is owner's equity. That is the account. Well, it's not the account. Capital is the account, but it's affecting owner's equity. So what are the two accounts? It would be bank and capital. So We've got money in the bank, plus. Does capital increase or decrease owner's equity? It increases owner's equity, so it is plus and plus. The owner withdraws 2,000 Rand for personal use per EFT. Now remember what we said, when the owner withdraws for personal use, it's called drawings. Drawings is its own account. What does drawings always do to owner's equity? It decreases owner's equity. What is the other account that it affects? Always, always, always bank. Has it increased your bank account, the balance, or has it decreased your bank balance? It's decreased. You've taken money out of your bank to pay for personal use. So it is a minus, and the two accounts affected is bank and drawings. Now we borrow money from the bank. What are the two accounts? Bank. We borrow money from the bank. So our bank account is going to be affected. And liabilities. The account is called loan. We don't have an account called liabilities. We have an account called loan. Now, when you borrow money from an institution, your loan is then going to increase. Your liabilities is increasing. So it is plus. What you owe has increased. Look at bank. Bank is the other one, because when I'm borrowing money from somewhere, what happens? They're going to take that money and put it into my bank account. Is my bank balance more or less? It is more. So bank is a plus, loan is a plus. And that is how you would do that one. Right, grade 8s. When you have a look at this slide over here, we are going to be understanding what are the two accounts that are going to affect assets, owner's equity, and liabilities. So what are the two accounts? Service fees received and banked. What are those? It's going to be current income or service fees and bank. Is it going to increase our bank when we receive money into the bank account? Yes. Service fees are also known as income. So does that affect owner's equity positively or negatively? Positively. Look at the next one. Withdraw cash for the cash float. What are the two accounts? It's going to be bank and cash float. Now, what is bank? It's an asset. What is cash float? It's an asset. When we withdraw money out of our bank account, is that increasing our money in the bank or decreasing? It's decreasing. Cash float, have we put money into the cash float? Is the cash float box more? Yes. So that's going to be plus. What are the two accounts? Paid advertising per EFT, 2,000 Rand. Paid, where do you pay from? Bank. What did we pay? Advertising. What is advertising? It's an expense. What does expenses do to owner's equity? Expenses decrease owner's equity, so it is a minus. What are the two accounts? We received interest from our bank. Bank and interest received. Has our bank increased with the money that we're receiving into the bank account? Yes. Received interest is also known as what account? What does it affect? It affects owner's equity, and it's seen as an income. So income, interest received, seen as an income, it increases owner's equity. Bought vehicle per EFT, 100,000 Rand. What are the two accounts? Put them in the comments below. I want to know if you know what bought vehicle per EFT 100,000 is. Last one, commission was received in bank, 2,000 Rand. What is that? What are the two accounts? Put that in the comments below. Let's have a look at what you come up with. Right, grade 8s, we have covered this very extensively. You might have to go back and re-look at it and go slowly through each of these. Remember that table of assets, owners, equity, and liabilities. That is the blueprint. You must know that. You must know what falls in assets, what falls in owner's equity, what is an income, what is an expense, and what falls under liabilities. With that, I'll see you in the next episode.